Good afternoon and welcome to ULTradez, the YouTube channel I created for the purpose of documenting my process or my journey of getting 20 Apex accounts through the evaluation process, funded, and eventually to payout. So today is my recap video for August the 28th. It's a Monday. It is right now 2 o'clock in the afternoon Central Time. I was done trading at 11 a.m. Central Time, which is one of my rules. I then went out for a nice walk in this beautiful weather that we're having right now in Northwest Indiana. It's a beautiful sunny day, mid-70s. That doesn't happen often, so I had to go enjoy that. Came back, cleaned up, and now we're here to hopefully get this recap video out. I've been using Camtasia to do these screen recordings, and it's been giving me hassles and telling me I don't have enough disk space for this recording, which I do. So we tweaked some things. Hopefully it works. All right. So before I kind of get into this, because it's been several days since I made a recap video. What I did was I went through my previous, several days, weeks worth of trades and kind of tried to identify, where were my weaknesses? Where was I winning trades well? Where was I losing? And what I found was the winning trades were typically the ones that were more mechanical, following, kind of a set process that was proven, which makes sense. And unfortunately, those wins were offset by losses where I was sort of testing strategies and trying other things, which weren't bad necessarily, but I wasn't, because they were still, I hadn't fully vetted those. I didn't manage those trades well. They ended up losing, and that offset the wins that I was having. So what I'm doing really for the next week or two, or maybe more, is focusing on really just mechanical execution of my trades. I'm not trying to predict what the market is going to do. All I'm looking for is my entry criteria. Once that entry criteria appears, I enter the trade. That's it. What I noticed was a lot of times I was trying to kind of outsmart the market, or I thought, hey, this doesn't look like it's going to work out, so I'm going to stay out. And when in fact it would have worked out. Other times I got into trades and then cut them short because I saw something that concerned me, or I let them run because I thought they would be okay and they weren't. And so I did a lot of back testing. I did a live on Saturday, so 2 days ago, where I back tested for 5 days and went through that process with this strategy. I'm going to do some more back testing actually right after I get done with this video, because I think I can dial in the ATM strategy a little bit better, but I need some more data before I can make that determination. I'll probably live stream that as well, so you can check that out for some more. It probably won't be too exciting watching me go through that process, but if you're curious about what the strategy is, there'll be more information in that live video, so you can look out for that. One of the reasons I started to do this back testing live is because it allows me to talk through it. Again, this is totally self-serving, so forgive me for that. But if anybody finds value in that, maybe it can benefit somebody out there. If you see me doing something totally crazy, feel free and comment and let me know. But it allows me to talk through it where I'm not just talking to myself. I mean, most of the time I will be talking to myself, but it makes me feel less crazy. So with that out of the way, we'll get into it. So here I had 2 trades today. You can see my P&L, $260 favorable in all the accounts. Right now I'm at 14 accounts. I was at 10 accounts, but I reset 4 today because there's a 50% off resets going on for the next couple of days. And there's the potential, if I get these passed in 7 days, that they could be ready for a payout in the next cycle. So I'm not 100% sure that's going to work, but I want to give them a chance. So we're at 14 accounts right now. These accounts down here are blown. So once they reset in the next couple of days, then I'll add them back in. But that's where we're at. So the 2 trades that I took are right here. And again, I'll maybe do another video, we'll see, that goes into the strategy if anybody's curious. But here's where we're at. Very, very briefly, this is a strategy that's a spin-off. It's my own adaptation of Robert Anderson's strategy. So if you can check out his YouTube channel, The Trading Journey of Robert Anderson, and he goes through it in depth on his channel. But essentially, I'm looking for a touch of this gold line here, which is the 9 EMA from the 5-minute time frame, or a touch of this line here, which is the 21 SMA from the 5-minute timeline. And those that touch counter, so the first or second touch is what I'm looking for. And that is reset by a close on the other side of the line. So if price closes on the opposite side of this gold line, that would be a reset. So that then if price comes back above it, the next touch would be the first touch. So coming into the market this morning, you can see price was kind of bouncing off of that line coming into the open. And that's what this box is. That's the first 15 minutes. But right before the open, price does close below it. So that's a reset and then pushes up. So I'm looking for the first touch, and then my strategy says that I attach the order entry to the line, and I do one tick above the line. So the order is just following the line up. I come down, I get ticked in right here. Half of the position is sold off at 10 ticks. The other half has a 25 tick trailing stop. So in this case, it didn't go very far before it came back down and stopped out the second half for a small loss. That was a net gain on that trade. And that's really what I'm looking for. I'm really looking to protect against losses more than just hold out for big wins. So this I think was like a $60 trade or something. This one here was the second touch. So as soon as price pushed off of the line, I put a second order, just one tick above this. And as soon as price came down, it ticked in, shot up, sold my 10 contracts here, and came down again for like a one tick loss, I think. Yeah, one tick loss on the second half of the position. So that's that was it. After that, price comes down and it does touch this red line, and this would have worked. I started out with a 20 tick stop loss, which would have been like 2 ticks, I think, below the low. So that would have worked. But one thing that will disqualify me from entering a trade is if price is just riding this 1 minute 9 EMA, which is this really thin gold line. If price is just riding that, I don't take a trade into it. So in this case, it would have worked, but it did pull back quite a ways before it came through. So that followed my rule. So that was good. I continued to wait and wait and wait and wait. This one, I should have taken this trade. By this time I mean, everything's kind of trickling down. So there is downward direction in the market, but it's really slow. And, I just wasn't, I don't know. I should have taken it because, again, it would have worked. But this was kind of gray area for me. We were riding this line again, and even though we pushed to the top of it, this is a cross of these two. I don't know. I guess I should say that my strategy says I should have got in that trade. There was nothing here that technically disqualified the trade. I was concerned that price was going to have because movement was so slow, price was going to trickle up into here and push down. So what I learned from that is, one, I start to overthink, right? So the purpose of this is to mechanically execute the trade. I shouldn't think. This one was a trade that was invalid because this was a clear my rules include this. Include riding this EMA and not taking a trade into it if we're just holding tight to it. This one was more me just trying to predict the market versus a rule. And it cost me a little bit of money. I mean, I didn't lose money, but I could have made some off of that. So that was my fail. And again, that's why I don't trade past 11 o'clock, because if I did, that's what I start to do is I start to second guess. And, I was looking at my profit saying, well, I'm in profit. I don't know, maybe it's not worth risking it to get in another trade when there's no clear direction. And well, sorry, there is clear direction, but there's no momentum, because that's really what we're looking for. We're looking for a price to come in and push off. And at this point, there's really nothing. It's so close to the line. You're not coming in hot. And, you can see it does push past it before it eventually does. It does drop. But it's just not the price action that gives me the warm and fuzzy, compared to this, which didn't work out as well. I mean, eventually it did. Actually, if you look at this, it's kind of interesting because, I get stopped out here, which is basically the bottom. I mean, it does come down like 4 ticks or something below where my trailing stop had pulled up. And then it pushes up. It doesn't go 40 ticks, but it goes up, more than, it wouldn't have been negative for that second half. So market quirks. But those are my trades. So we're going to do some more back testing, and really the purpose of the back testing is to one, understand where we can dial in the ATM strategy to maybe squeeze more out of these. Do we let them run a little bit? Do we, is the stop loss right? One of the things that I look at here is if I had my target at 20 ticks, I hit 20 ticks on each of these trades. So this trade hit 20 ticks, this trade hit 20 ticks, and this trade, obviously would have. So that would have been $1,500 worth of trades in those 3 trades, $500 a trade if I reduced if I sold at 10 and 20 instead of 10 and 40, which is what my ATM strategy is now, even though that says 30. Don't pay attention to that. It's 40. But I don't know if that, that would have worked today. I don't know how it works over time. So that's what I need to understand. And then the second reason for the back testing is for me to get in that rhythm and routine of hitting the button. Because this should be easy. Like there should be no stress here. This should be totally mindless. I'm not trying. I honestly walked away from these. I got into this and I got up and walked away. I had my headphones on so I could hear it ding whenever it sold or did its thing. But that's the way these should be, in my opinion, is you have your strategy, you have it set up, and you let it go and let it do its thing. At least I found in my trading, my interference typically does not improve the outcome. My interference in a trade typically causes me to come out further, not as far ahead as I would if I just let the process roll. So that's my strategy, or that's my recap for today. We're optimistic. I think by the end of this week we'll have these accounts done, which would be a huge victory. Maybe I shouldn't have said that. Let me knock on some wood here. Anyway, hope you had a great day. Hope you followed your rules. Trade safe, and we'll talk to you tomorrow. Bye-bye.